Good evening. This is Tom Alexander. It is Sunday, November 7th. It is 4:31 p.m. Eastern Time in the U.S. here in beautiful Charleston, South Carolina. And we're going to go through in a little bit more detail the information that is in the report this weekend. And this is pretty much Groundhog Day from what I said in the FOMC report, special report that I sent on Wednesday. You may want to go back and take a listen to that because there's a lot of the same information. We're just a little bit further extended. But as of the close on Friday and the cash indices from print low to print high since October 13th, the S&P is up over 9%. NDX up 12.3, the Dow almost 7, and the Russell is up almost 9% in like 6 or 7 trading days. Now, the fact that the Russell has broken out of this multi-month balance area is a very, very significant long-term event for the stock market. And the implication of that is that, and especially, I mean, it's been confirmed in spades that this appears to be a genuine initiative break to the upside. So we really should not see the Russell retrace back deeply into that area of balance that was formed over that 8-month period during this bull market. And the implications of the fact that we have traded, or we closed at new all-time high ground on all 4 of the indices last week on several days, that's a long-term positive for this bull market. It is unlikely that we see any significant top in the indices, any top of the bull market. We may see a top of 10%, 12%, 15% at some point before the bull market ends, and then we'll have another top that sets up bigger divergences, things like that. But the fact that the indices have erased any divergences among and between themselves is a net positive for the long term in this bull market. It likely pushes out months into the future the idea of a short-term top. Now I want to show you, which I'm not doing now. Here are the indices. So you can see the S&P, the NDX, the Russell, and the Dow have all closed a new high ground. They're all in initiative development, vertical development to the upside. An auction market basically has 2 conditions: vertical development, horizontal development. Horizontal development is the natural state of the market, and the market will spend most of its time in horizontal development. So this is really the inefficient phase of the market, and I don't want to get too deep into the auction market verbiage and nomenclature. I'll try and keep this practical for all of us. But we have an uptrend, the rate of change of which is unsustainable. And I want to show you precedent for what the present trend. Now, we have seen trends of this magnitude several times. Actually, we've seen it for years, but I'm typically usually referencing the March 2020 low. And we have seen ramps like this several times in the past. The ramps began to slow down in terms of rate of change a little bit. For instance, this was back in March. This was pretty healthy, but it was 8.6%. So we've already exceeded anything that we've seen in terms of a ramp going back a year ago, back into November. And back in November a year ago, we traded about 13% higher and sort of had this blow off top. And this is why I constantly qualify my statement about a market going straight up or straight down with the qualifier that we may go a lot higher, but we're not going to go higher at this rate of change. And this is the poster child for that occurred a year ago. Now, maybe this is the analog for what we're seeing now, what happened a year ago. And so what happened a year ago that was very significant, we had this sort of this blow off momentum peak, and then we had 2 days, that was it, 2 days of retracement, and then we slogged higher into February before there was any, or the end of January, and then a more significant high in middle February. But from the reaction low off of this little short-term blow off top here that lasted 2 days, we still went, gosh, almost the same distance higher, just at a much slower rate of change, and it was very two-sided. Now, from a trading perspective, I love this because it gives you more opportunity and more time frames than just a vertical ramp, one-sided ramp in one direction. This is going to occur at a minimum, this two-sided trade, even will go higher into the end of the year. And we're going to see that begin sooner rather than later. Now, I don't have a crystal ball. Don't pretend to have a crystal ball. I'm not in the guessing game of where, trying to divine the exact price that a market is going to stop and turn. That has, to me, that's not tradable information. But because I do understand and I do know for a fact that this option process is in effect in all degrees of time all the time, I do know that the rate of change that we're presently experiencing is going to slow down sooner rather than later. We're sort of in that musical chairs phase where it's going to occur. And I guess the bigger message here is the practical message for those of us that trade any time frame, swing trade, position trade, whatever it is not to get greedy and pressing the long side in here, because this vertical stuff has a shelf life. Now, this is already extended, and that's, using the example of the rally off the March 2020 low, the whole part of it. And the more vertical we go, if we go up, if we open tonight and Globex and we gap up again, we're up Monday, we're up Tuesday, you're approaching that blow off type of scenario where you could get this sudden downdraft like we saw over here, right here. Okay, I'm going to highlight it again. So this was a situation, this was back in the summer of 2020, but it was coming off this extraordinarily compressed low here. And I think it was still working that off. But the indices did indeed have this blow off top. And then you had this dramatic drop, a little bit of balance, and then, we had this. But if we don't begin to see this soon, then it increases the probability that it's just going to go higher and higher and higher, like a balloon getting too much air, until ultimately you get this sudden out of the blue air pocket, and you get this 2, 3, or 1 or 2% decline in a day. So that's why I'm not pressing alongside in this market now. As from in terms of strategy and tactics, you always have to have something in your trade plan that triggers the confirmation of your analysis, that your analysis might be correct. So if some pivot low is being taken out intraday, a previous day's low, that type of thing. I'm not, by no means am I suggesting to sell everything here and go short. You're guessing, you're throwing darts if you do that. The message here is the market is likely to become more two-sided. And when it does, we'll be able to recognize it. You really can't recognize it in advance. Now, Friday began to get a little more two-sided intraday, and that's something else, that if this market does trade higher into the end of the year, in addition to having this 1, 2, 3 day overlap that we don't have now in terms of price, the intraday trade will become more rotational. So, and that's an ideal trading scenario. So this is the benefit of understanding option market principles, because if you can identify market condition, you can adjust your strategy and your tactics to that market condition to give you the highest probability of positive expectancy. Okay, let's take a look at the profile view. And here you go. So what we have off of this October 13th low is a distribution in auction market / market profile parlance. It's a trend. It's a vertical trend, and it following a vertical trend will be horizontal development, a consolidation in universal trading language. And that is going to happen sooner rather than later. This is a trend that, again, the rate of change is pretty, it's up there in terms of being relatively rare. So the next phase of development, and I went through this concept in both the FOMC report and I think last weekend's report as well. And you can see you can look at the report. I have a couple of scenarios. Maybe Friday was a high and we're going to rotate, or maybe the high comes on Wednesday and we rotate again. I don't have a crystal ball. I don't try to give you, impress everybody by saying, okay, this thing is going to turn from 4738.25. I don't know. So, but you don't have to know. So we'll be looking for some signal that the market is becoming two-sided, and we will know it by the market beginning to turn lower, making lower lows and lower highs in the shorter term time frames, whether you intraday on an hourly chart, 30-minute chart, 5-minute chart, etc. Okay, let's take a look at breadth, which is helpful, but you have to be careful with it. I always give the caveats that breadth, analyzing the price breadth relationship, is very helpful in downtrends, not so much in uptrends. So I take this just as another heads up, and it's consistent with the idea that we're about to, at a minimum, become more rotational on a day-to-day basis. You can see the 10-day moving average of advancing issues, which is this red line here, is diverging in several degrees against higher highs in the S&P. Breadth NYSE advancing minus declining issues is also diverging. So, divergence can resolve bullishly too. I mean, if the institutions are pushing the buy buttons and glowbacks and it carries over into Monday and Tuesday, then, maybe breadth closes at, I don't know, plus 1,800, plus 2,000, and that's a reset on a short-term basis and would likely put out into the distance by 2 or 3 days at least, the short-term top that I think is inevitable, but I can't divine. So now the other thing I want to show here, and this is for, in particular, you really short-term traders, you day traders, and we do this in our live trade room. We lean pretty heavily on this. There's a typical relationship between price and breadth. There's a personality in a given trend that you can sort of read, and it can be helpful at times. And if you look at this, some things are obvious, some things are not as obvious, but that are very important. And if you know what to look for, can be helpful. So this was really the momentum peak of this rally was here. And since then, we've made lower momentum peaks along the way, even up into Friday's gap. And then we traded higher for about an hour and traded off. And if you look down here, you get this ebb and flow, and the ebb part of the rally, you get a contraction in breadth, but you have very little price retracement accompanying that reaction. And when you do get that reaction, you almost get an immediate low. And this sort of coincides with the idea of higher highs and higher lows. You can see the pivots on this 30-minute chart are relentlessly up. It's clear if you're looking, here's a higher low, 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 on and on and on and on into Friday's low. Okay. Now, the ideal pattern that will occasionally play out in an ideal way, and it may not do that. I mean, we may get an idea in glowbacks, but a lot of times what will happen is you'll have momentum just get so weak it will just die. And we've seen, and I've shown examples of this, a lot of you've seen them, where we'll have you can have, there are examples in the past 18 months or so where we've had the S&P up 2 consecutive days, relatively wide range, with breadth negative. So breadth did go out rather positive on Friday. So I wouldn't be too surprised to see some strength on Monday. Again, we'll probably know this in an hour, but on much weaker breadth. And this is more of a day trade than swing trade or position trade thing, but that it's something that we'll be watching for as day traders. If we do see this market come up here like this, and then following, typically what would happen, the S&P might be down at the cash market might be down 8 or 10 handles, and breadth opens way down here. And then you have the S&P, the indices rally. Some are making new highs above Friday's highs, others aren't. And then you have breadth coming in here and making a much lower high against that level. So this can be a very useful short-term tool for those of you that trade short-term intraday. Okay, guys, thank you for watching. Again, it would be a big help. I would very much appreciate if you found value in this to like the video. And if you have not subscribed to my YouTube channel, to please hit subscribe. You guys have a great Sunday evening, and let's go get them next week.